Hey yo, what is ripen up with my people, the Chico army, and of course if you're a newbie, a viewer of the tube. My name is Tyler, the host of the crypto channel that doesn't know if you can handle the truth.
Okay, someone put their persona pointing a gun at me and said, "Show us what's inside the fridge, Wayne." You want the truth? You want the truth? You want the truth? Oh, there is no fridge! It was never real.
Is this plant real? Am I real? You will never know. It's time for Chico Crypto. Well, speaking of fake, we gotta look into something in the regulated cryptocurrency space which might be as fake as your last girlfriend telling you it's her and not you.
It's not you, it's me.
You're giving me the "it's not you, it's me" routine?
What am I talking about? Regulated futures exchanges within the US, like CME and Bakkt. With the surging prices, we have seen Bakkt go bananas, reaching nearly 100 million in 24-hour volume, which is big for Bakkt because if we pull out a weekly volume chart, Bakkt only on a few occasions since the end of 2019 and throughout this year has reached over 100 million throughout the entire week. And then look at CME volume, hitting 1.3 billion in 24 hours, making the days past look like peanuts in comparison. So I'm sure if you watch any of the TA crypto YouTubers, you know something from CME, which makes its way into all the chart talk, the CME Gap. So first, what is this? For those who don't know, well, it's a gap in the CME Bitcoin charts, and they occur because CME isn't trading 24/7. So at a certain point in the day, the market closes and trading stops. Meanwhile, Bitcoin keeps trading on other exchanges, and thus can go higher or lower in the time that CME is closed. If CME opens again, it will trade at the same price as the Bitcoin exchanges, and this creates a gap between the closing price of the CME and the opening price. It's when the unregulated exchanges can go full throttle without any strings being pulled from the regulated side. And usually the bigger gaps are created over the weekend as CME is closed during that entire time. And in the past, many of these gaps get filled and people think it's some sort of indicator of where the markets will go. So half of the recent gains in Bitcoin were done over the weekend, so that has created a recent gap with CME at around 9,600 to above 9,900. And what do you think the TA tubers are doing? Mourning about that gap, that it's going to get filled, yet the price has just kept on going up. Because there was another gap which was forgotten about, as it was made all the way back in August of 2019 at around the $11,700 to $11,800 range. Oh no, so what is going to happen? These CME gaps supposedly need filled. So are we going to go down first to fill the lower one and then pump, or pump, hit that one, and then dump? Or maybe those are just fake BS and nothing to take seriously, as besides the two we have shown, there was also one at around the $11,050 range, a small one that got filled as I was shooting this video. Oh no, and then an even bigger one below that has yet to be filled, around the 3.5k range. And then the best one of all, between 3.2k and 0, as Bitcoin was above that price when CME began trading in December 2017. So I really don't get why people pay attention to these. With a volatile asset like Bitcoin that goes up and down violently, of course if an exchange goes offline, gaps will be filled a majority of the time. It's just going to happen. But there will be times that they won't get filled, and there is no rhyme or reason to which ones or ones it could be. If we stay bullish, then we will leave 3 gaps in the dust, 0 to 3.2k, the 3.5k one, and the 9.6k one, and then fill one gap, 11.6k, because we are bullish and the price is going up. And for this prophecy of gaps to officially come true, we would have to crash down to 3.5k and then to 0. Do you think that is going to happen anytime soon? I personally don't think so, as many people think it's some markets at the whim of Bakkt and CME, the regulated exchanges. But just looking at CME's volume in the light yellow and Bakkt in the pink, compared with all the other exchanges unregulated, you see it's a smidgen. And then with the exchanges tracked by Skew, on Monday, July 27th, there was over 42 billion in Bitcoin futures volume. CME and Bakkt made up about 1.4 billion of that, or just 3.3%. They are not controlling the markets. It's obvious from the volume. So who is? Well, I talked about it yesterday and on Monday, a combination of the derivative exchanges and Tether USDT. And that is why I will not try and make any short-term prediction of where Bitcoin will go, as the moving pieces get bigger and harder to predict each day. After a large Tether print and pump, which was super obvious, the markets move where derivative whales and exchanges who are not on CME or Bakkt can make the most money. Are the majority of people going short or long? The only people who know that are the ones who can see the players' cards, the plays in each of every trader on their exchange, and that is the exchanges themselves. Arthur Hayes, he is going baloney, tweeting again this: if you aren't long on Bitcoin, and a meme of Mr. T, I pity the fool. And look at this, even with the violent bullish movements breaking resistance left and right and getting above a level for only the third time in history, his exchange only managed just over 230 million in short liquidations in 7 days, an entire week. What happened on one day during the violent March crash when BitMEX had to turn on those circuit breakers? Over 1.6 billion liquidated in one day. When you get a taste of that kind of money, it's something that you get used to. And personally, I think the markets are getting set up for an even more violent move, which makes the exchanges the most money. But let's be stoic and not worry about the things we cannot control. Let's worry about the things that are in our control, like research and finding good projects that will hold their pumps against BTC. Looking at the Bitcoin dominance chart over the past 7 days, we can see dominance of BTC got to a low of around 60% on Sunday, while other altcoins out of the top 10 combined peaked at about 14.3%. But since the major pump, the dominance has grown for Bitcoin up to nearly 63%, while others have fallen to below 12%. And then switching to CoinGecko and altcoins price versus Bitcoin, you can see over the past 7 days, a ton of altcoins have fallen steeply against Bitcoin. 50%, 30%, 20%, large chunks as the cycle comes to a close. But what's an altcoin that has held its Bitcoin ratio over the past 7 days? Not a significant chunk taken out. My number one pick for 2020, Energy Web. As we can see, the price in Bitcoin has only slightly deflated against BTC, as Energy Web has been holding its USD price and holding it strong. And then expanding out the USD chart over 180 days, the growth of EWT is spread out, with hype cycles of course, but it has been holding levels after each and then continuing up. Why is this happening? Well, some people will blame it on me, but it's because EWT is the real deal, with real-world applications coming very soon from massive enterprise partners. And I finally found it, the closest and best connection yet, which could put Energy Web working on an energy project with Tesla. I've made a few slight connections, but nothing this tight. So going to Energy Web's ecosystem page, there's a partner of theirs, which I have not covered, and that is E.ON. And who is this? Well, it's a European electric utility company based in Germany, and they run one of the world's largest investor-owned electric utility service providers, with over 40 billion in 2019 revenue. Now, E.ON has been working with Energy Web for a good while now. They were part of the first group to test EW Origin back in April of 2018, besides Engie, Microsoft, SP Group, and more. And from the article, it says EWF is developing Origin in collaboration with multiple EWF affiliates and industry leaders who test and inform this new tool. Over roughly the past year, active engagement and input from EWF affiliates, namely Engie, SP Group, TWL, E.ON, Equinor, Exelon, and PTT, shaped the vision for Origin and inspired EWF to proceed with developing it. And then it also says this: in addition, E.ON and TWL are in the process of completing yet another simulated transaction in which E.ON is the test buyer of green attributes from TWL assets in Germany. Now, E.ON has a whole section on their website about blockchain, as they are getting gung-ho on it. They give a breakdown of what blockchain is for their customers and readers, and in the example section, they give this. Other examples include Bitcoin, the most well-known, Tendermint, Ethereum, Hyperledger, and the Energy Web Foundation EWF. At E.ON, we are a part of the EWF, a nonprofit that was conceived at the Rocky Mountain Institute. It was started as a great place to explore blockchain technology within the energy industry. Now is an open source scalable blockchain platform specifically designed for the energy sector's regulatory, operational, and market needs. So how deep are they in with Energy Web? Well, they are super deep, as one of the initial 10 validator nodes from this June 2019 Green Tech Media article titled "The Energy Sector Gets Its First Custom-Built Blockchain." It states, the Zug Switzerland-based Energy Web Foundation this week said its blockchain, EWT chain, was up and running with validator nodes hosted by 10 companies within its affiliate ecosystem, which include utilities such as Centrica, Duke Energy, and E.ON. So, a deep connection. And guess what was announced in March of this year? Tesla had contracted E.ON to provide energy solutions at its Berlin Gigafactory. And from the article on the topic, Chief Executive John Tessian said, they've given us 18 months and will deliver in a conference call. And from Reuters, the ones who dropped the story, in their article titled E.ON to link Tesla's German Gigafactory to the grid, they said this: the grid connection will be done by EDIS Nets, a unit of E.ON, the company said. And you just gotta go to Energy Web's GitHub to see what could be being worked on. Searching by EDIS, we come up upon some libraries worked on very recently. Sonnen EDIS POC UI, aka Proof of Concept User Interface, and the Sonnen EDIS Proof of Concept LIB, aka Library. EDIS, as in EDIS Nets, a subsidiary of E.ON, those connecting the Tesla Gigafactory to the grid? I wonder what they would be doing that for. To sell that power, baby, through the D3A and thus the Energy Web chain. Am I correct? We will see. Cheers, viewers. I'll see you next time.